What's going on, everybody? This is Jack with the Trading Tribe. Excited to be back at it today with what we're going to call a market review or a state of the market session. And I'm thinking about having these every now and then just to get the group kind of in the know, if you will, about what the market's actually doing and what we actually expect in the short term from the market. And as everybody probably knows based on those past videos on the channel, I do prefer trading futures. I trade all sorts of vehicles depending on kind of the opportunity, but for today and really moving forward, whenever we do a market cycle review or a state of the market, I will be looking at the futures market to kind of show that just based on how pure that price action is. So today, right, if we look at the ES or the S&P 500 future, that is going to be the ticker we look at to just understand what's actually going on in the market. And if we look, right, we do have quite a bit of action in the market. So this entire year, really, ever since last December, we've been dropping essentially. So we have been in a certified recession with two back-to-back quarters of dropping GDP, and really from any sort of stat we look at, right, the market has been in a recession. But even from a trading standpoint, right, we're making lower lows and we're making lower highs, right? Lower lows, lower highs. So for this entire year, really, we have been shorting the market or shorting different opportunities if we are getting involved in the stock market. What we always want to do in trading is we don't want to fight the trend, right? So we do not want to be buying aggressively quite yet. We want to wait until confirmation of that uptrend beginning. And I do think there's a chance that our bottom is in. So we'll notice, right, we've dropped pretty much for 12 months straight. And we did have a really strong bounce in this 3,600 level. And we kind of had a double bottom, if you will, kind of in this last move. And GDP has kind of begun stabilizing, same as inflation. So some of the fundamental catalysts for us going down so drastically this year have started to turn. Inflation has finally started going down, which is actually this massive green candle last week, and really what happened there to cause that. So I do think there's a chance that we begin to consolidate a little bit these next couple months as we begin another bull cycle. But I do think there is potential for us to go lower. If we notice, right, the 200-day moving average ever since February of 2022 has been acting as somewhat the resistance for the S&P 500. So every time it comes back to that moving average, it has failed. We're pretty close to that moving average again. So if you're thinking of making an investment in really anything relating to the stock market, I would be careful right now, as we do see kind of overhead resistance at this level, right? So if we come up to this 200-day moving average, we'd pretty much expect for it to reject back down to these lows. That doesn't mean it has to, right? With a downtrend, there can always be a reversal. The momentum can always switch, and the stock market, right, will go back to those all-time highs most likely in the near future. Recessions usually don't last longer than 12 months on average. So we'll have to stay tuned for if the market does break this moving average. This is going to be one of the major things that I'm looking for, because if we do break that and make new highs, even if we go above this 4,200 area, I'd be very interested for really it tapping back to those highs. So definitely still investing, definitely still doing kind of the normal buying on a monthly basis, but we don't want to get too aggressive, right, until we see that this recession is actually turning around and that we are getting back into a buyer's market. If we zoom out a little bit, we're on the daily right now, so this is just showing us the entire year. If we zoom out to maybe the monthly or the weekly, we can actually understand what the S&P 500 typically does, right? So this is going to be kind of a good way to build confidence. It's a tough time right now to trade and invest in stock-related vehicles. just because so many things are dropping and a lot of people out there aren't comfortable shorting. But this year has had plenty of opportunity. It just has been mainly on that short side. If we notice though, there's a couple key levels I have for the S&P, and we'll notice, right, that every time there's a correction, right, or a recession, right, back in 2008-9 or during COVID, right, anytime there's a major correction or pullback, pretty quickly thereafter, we do have another rip to those highs. And not only do we recover like in 2008-9, but we always make new highs, right? After COVID, we had some interesting government regulations here, so we had a quick bounce with COVID, but we're all expecting that same move. So we do want to be careful these next couple months because we don't want to try to guess the bottom, but we are getting pretty bullish based on the price action we're seeing. And if we zoom in a little bit deeper, we bounced really closely to an interesting level here. This 3,400 level was actually the top before COVID hit. So we'll notice it was a pretty important high on this monthly time frame. And we got really close to that during this last pullback. And this is going to act as a really strong ceiling. And we'll notice with the S&P 500, it actually does respect our levels pretty well. So if we look at COVID actually ended up dropping to those highs for that prior breakout level. And same with the S&P 500, right? They made a pretty strong breakout level and it never was weak enough to get there. But we'll notice the S&P 500 actually does react pretty well to these tops that are put in. So we're going to have a lot of buyers at that 3,500 level. We've already seen that, right? And we are starting to get some good news. So even if we drop down to the lower time frames, right, we're going to start seeing a lot of buyers. Even in this 5-day, 5-minute time frame, we're seeing an explosion of buyers. Obviously, this move based on last week was primarily news related, but in these coming couple days or weeks, we're going to want to see it break that 4,000 level and begin another subsequent move there. So super excited to follow up with this and see really what comes out of this for the market, and keep your eyes out for buying trading opportunities. And really, we will follow up with this later. Thanks, team.